Market at day's low, stock slip as concerns over possible risks in global banking weigh on the sentiment, despite UBS agreeing to buy Credit Suisse for nearly $3 billion. Metals, IT and autos lead the slide today.
The mega merger of HDFC with HDFC Bank gets the final nod from the NCLT, paving the way for the integration of the housing finance business into the bank. Analysts see the expected move tempering growth for the bank.
Adani Enterprises puts the 34,900 crore rupees green PVC project of Mundra Petrochem on hold, reports PTI. Adani Group spokesperson tells CNBC-TV18 that status of growth projects will be evaluated. The move seems aimed at allaying investor concerns over high debt.
Stocks of Cochin Shipyard, SJVN and Rail Vikas Nigam perk up following order and project wins as capacity building sectors continue to see business flow.
And amid heightened volatility in global financial markets and growing uncertainty over the spillover effects of crisis in banking, while gold scales to a high as safe haven, buying pushes up the yellow metal. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar, and with me, as always, is my co-anchor Pavitra Parekh. So, Pavitra, the global, concerns are really affecting the Indian markets also, and the contagion effect, which everybody was probably, a little nervous about, that is showing up. So, even though there is solutions like SVB got bailed out, along with UBS buying out Credit Suisse, but in that process of that resolution, there has been some value destruction, and that's what markets seem to be bothered about. Nifty 50 at the low point of the trading day today, about 1.5% down, given up the 17,000 levels way back. 16,800 odd levels is where it's finding its comfort at lunch hour in this particular week as we start. Bank Nifty almost in the similar line as the key indices, while the mid caps taking a little deeper cut than the key indices and the big blue chips. Advanced decline ratio there heavily in favor of the declining stocks, with mid cap universe also seeing a sell-off. And while I take a look at all the blue chips counters contributing to Nifty 50, there is a broad-based sell-off, but one cannot not mention that metals, the high beta stocks, are taking more of the cut, along with Bajaj twins from the finance space. Pavitra.
Oh, absolutely. And, by the way, before we get to the individual stocks, take a look at what's going on with the global markets, because the selling pressure is intensifying across the board. Hong Kong markets down 3.2% right now. Nikkei is down a full 1.5%. You have Straits trading 1.8% in the red. The Dow futures, by the way, right now, if you take a look at it, it's around 300 points in the red. But from the top of the session, we've seen an over 700% drop on the Dow futures. So that pressure, of course, playing out on the rest of the pack as well. Advanced decline at 1:4. And you have 500 stocks, like I was saying, advancing for maybe only 2,000, which are declining right now. So intense selling pressure that we are seeing in the markets. And like Nisha was pointing out, it is the metals which are perhaps most heavily hammered today. Some of the larger names will be up on your screen. The bank stocks also, the larger ones we've mentioned, but take a look at something like an RBL Bank, Bank of Maharashtra, these ones seeing deep cuts. The only space which is perhaps holding up with a little bit of green is what you're seeing on the back of crude impact, because that is now at 70. So something like a BPCL, HPCL are the ones which are doing a little bit better. But let's talk about the big story this morning, and this is from the global markets, of course. UBS agreed to take over crisis-hit rival lender Credit Suisse for $3.2 billion in a historic deal, with Swiss regulators pledging up to $108 billion in liquidity assistance. So UBS Group CEO Ralph Hamers will head the combined entity, while shareholders of Credit Suisse will take a haircut of over 50%, with the deal valued at about 0.76 Swiss francs a share. Steve Sedgwick is standing by the big wall.
Okay, it is a problem of liquidity. That's the word coming in. So large transaction and a resolution in terms of the bailout of a bank. But the turmoil in banks in Europe as well as the United States may also have a ripple effect on the Indian IT sector. Reema Tendulkar is right here to tell us more about that. Reema.
Thanks so much for that. So the banking, financial services and the insurance vertical is the largest revenue contributor to the Indian IT services companies. Let's now talk about their exposure. Now, in the large cap space, approximately 30% of the revenues of TCS and Infosys comes in from the BFSI space. And in the mid-cap basket, and the mid-cap basket is generally vulnerable, but the stock to watch here will be Emphasis, where more than majority of the revenues, 50% plus revenues, comes in from the financial vertical. Now, amidst renewed fears of a global banking crisis, the question is, what can be the potential impact on Indian IT companies? Now, CLSA says there are two scenarios. The first one is a contained crisis with quick interventions by the central banks, which means it doesn't prolong. This can affect the decision-making in the BFSI vertical in the near term, but don't expect too much impact on the other verticals. That will be fairly minimal. And the EPS impact could be about 2 to 3% for the larger companies. Scenario number 2, according to CLSA, will be a larger and more elongated crisis, which goes on for some time. And here, the revenue growth of the BFSI vertical, which, as I said, is about 35% of the overall revenues, could get impacted, and this could also spill over into the other verticals, the impact like retail and telecom, something that we had seen in the GFC crisis. And the EPS impact over here could be much larger because revenues are getting impacted for nearly a year, 7 to 8%. CLSA also says there is a third scenario in which a large global bank fails, which sparks a wider credit crisis. There is a prolonged global recession, but CLSA says there's a minimal probability of such a scenario playing out, and hence they've ignored it for now. But they also go on to say that the margins should still be resilient in these scenarios, at least for the larger companies, at-scale companies. This is what we had seen in FY09 and FY10 as well, because there will be a calibration of annual wage hikes and promotions next year as companies look to curtail costs. Let's move on to hear out what JP Morgan has to say. The collapse of SVB's Signature Bank and concerns of liquidity across US and EU can further soften tech spends by banks over the short term, going up to 1 year. And this will impact the bank tech budgets. Now, again, JP Morgan also sees this impact in two ways. One, there will be a delay in deal ramp-ups. Means existingly won deals, as they want to ramp up, they may just pause, hit the pause button, which means revenue conversion over the next 1 or 2 quarters gets impacted. The second impact could be delays in deal closures, and this will impact revenues over the next 3 to 4 quarters, which means a near 1 year impact and pain. JP Morgan goes on to say that they estimate the US regional bank exposure is, there for Infi and TCS, but it's still less than 2 to 3% of the overall revenues. The estimate for SVB's exposure is just 10 to 20 basis points for companies like TCS, Infosys, LTIM, but it may lead to some provisions that the companies may have to take in Q4 of FY23. JP Morgan goes on to say that we've already seen a correction. Multiples have come down for the Indian IT companies, but the current estimates do not factor in the increased EPS risk from further slowing down in spending. Indian IT stocks, remember, have outperformed on a year-to-date basis, the Nifty by nearly 6%, because the Q3 earnings was not as bad as what the street was actually anticipating. But now, with the macro uncertainty rising, the focus is going to be on the Q4 earnings. 12th of April is when TCS reports its numbers, and we will get greater clarity on what the picture is and what the potential impact is. But right now, as you can see, brokerages too are a bit concerned, and they are saying there is a possibility of some slowdown in decision-making. Tech budgets from the banks could also get impacted. Back to you.
Oh, absolutely. That's the view that's been coming in across the board from these brokerages. Rima, thanks a lot for wrapping all of that up for us. But with that, let's also bring you some important opinion. This comes in from Timothy Moe of Goldman Sachs as he speaks on the stress that we're seeing across the financial markets. Listen in.
The framework, which is helpful for investors, is that we need to think about things in terms of 3 shocks that have happened. Obviously, there's first and foremost, a financial stress shock, and that's manifested then in an interest rate shock, and then that also likely has some sort of a growth shock. We've seen this shock in terms of broader financial conditions. We've also lowered our U.S. growth forecast by 30 basis points last week. Our U.S. economists did that because the smaller banks account for about half of the commercial industrial lending in the U.S., as well as real estate, both commercial and individual lending. So there's going to be some sort of a hit to growth.
All right, Indian markets seeing some sort of buying, especially in the consumption stocks. Keep that on your radar. With that, we'll slip into a short breather. But up next, we get you the latest on Japanese Prime Minister's visit to India.
Hey guys, welcome back. You're still tuned into Business Lunch here on CNBC-TV18, and let's now bring you some news coming in from the capital. Japanese Prime Minister Fumio Kishida arrived in Delhi earlier today as part of his two-day visit to India. So he's expected to discuss a wide array of topics of mutual interest, including the situation in the Indo-Pacific, given China's growing military aggression. Additionally, the two sides are also likely to discuss India's priorities during its presidency of G20 and Japan's presidency of the G7. The two leaders also addressed a joint press conference where Prime Minister Modi highlighted the importance of voicing the priorities of the Global South.
All right, away from that, we at News 18 Network are excited to announce the third edition of Rising India. Now, the most anticipated thought leadership forum in the country, where we bring together some of the biggest and the most prolific personalities to celebrate India's successes and growth story. Now, the theme for this year's edition is Real Heroes, where we bring you the stories of some of the most extraordinary common people, along with their uncommon achievements that have really helped bring about a positive change in our country, from recognizing people fighting climate emergency to even helping revive some of India's oldest art, heritage and culture. News 18 Network's vast pool of reporters across the country have helped identify these heroes amongst us. And over the course of the next few weeks, we will be bringing these stories to you. Take a look. Welcome back. You're watching Business Lunch. Take a look at the market. Yes, yo-yoing in a very tight range and off the low point of the trading session when we talk about Nifty 50. But take a look at Reliance Industries. It's dropped further, 1.7% down, low point of the trading session. And if you really take a look at its year-to-date movement as well, in this particular entire quarter, it has lost 15%, while Nifty 50 has lost 7%. So clearly underperformance to the key indices. While ITC, HUL, Nestle have seen some bit of pickup in the last few minutes of trade, and the consumption stocks have given some bit of stability to Nifty 50. Pidilite is on my radar at the moment from the mid-cap space. Keep an eye out on that. Moving on then, Central Board of Indirect Taxes and Customs has called for efforts to maximize the revenue collections for FY23. Timsi Jaipuria gets us all the details on this. Timsi, what are those ways of augmenting revenues?
Well, as we know that we are about to close the financial year, and that, taking cognizance of this fact, CBIC Chief Vivek Johri has written to his entire staff pan-India, especially calling for measures to mop up revenue. What he has written in his letter to the entire CBIC field formations and zonal heads is that there is an urgent attention that is required on revenue mobilization. He has actually said, and I quote, as we move towards the last few weeks of the financial year, we must focus more closely on our efforts to maximize revenue collections through every possible legitimate means, end of quote. And he's asked zonal chiefs to closely monitor revenue augmentation and collection efforts. Some of the measures that he has actually cited that could be part of this entire exercise is expeditious clearances in customs, recovery of arrears from ripe cases, disposal of seized and confiscated cargo, and nudging all the non-filers to file returns on urgent basis. So he has actually outlined the measures on which he wants his office and his staff and his entire field formations to work on, so that in the last 15 days they can realize the maximum revenue collections which is possible. Back to you.
All right, Timsi, thanks a lot for bringing us all of the details on this story. With that, we're going to wind down in this edition of Business Lunch with the news that the markets are still down 240 points. Thanks for tuning in. Mid-Cap Radar after this short break.